Looking for the best opportunities in Perth property? Get the local area expertise you need from Momentum Wealth, WA's trusted property investment consultants. Market insights, advice and representation from award-winning buyers agents and REWA Hall of Fame inductees. Visit Momentum Wealth's website at momentumwealth.com.au to organise your obligation-free consultation today.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hello everyone and welcome to a very special episode of the Smart Property Investment Podcast. Today replacing Phil as your host is Maja, the editor of Momentum's Consumer Wealth Suite. Joining me is a very familiar voice, Grace, my colleague here at Momentum. Welcome, Grace.
Hi Maja, how are you?
I'm really good. How are you?
Pretty good. Excited that we're about to go on a break, have a bit of a holiday.
Exactly.
I think Christmas has been a long time coming this year, so hope all our listeners as well are taking some time out from the day-to-day.
Yeah, I hope so too, and I hope everyone is doing really well as we head into 2021 finally. So today, Grace, we will look back at some of the most popular SPI podcasts across this year 2020. It's actually really interesting to go back and to listen to some of these and to listen to how our guests and Phil himself saw this year and how the property market moves from sort of thinking that 2020 could in fact see the best conditions for real estate in over a decade to then being gripped by, the uncertainty of COVID-19 and, the crisis, the economic crisis, and then to see how that confidence sort of increased and as Australia came out of that first COVID wave and fought its way sort of out of a pretty dire situation. As I sat at home last night prepping for this podcast, one thing that sort of stood out to me was a comment that Simon Presley made on the 6th of February. Just as news reports of a new virus were coming out of China, Simon and Phil were actually discussing the top 10 property market influencers. And here is something Simon had to say which really resonates with the situation we see today.
Wherever there is a demand for more jobs, there will be demand for more shelter. As a property investor, you are investing in shelter. Don't focus on the bricks and mortar, how it looks. You need to see property as a commodity when you're an investor. It's a financial instrument. Think of it more like how a share investor would invest. So when more jobs are created, you have an improved mood, you have improved wages. The location may attract people from somewhere else where they don't have a job to relocate there. So, we talked earlier about internal migration. I've given you an example there, a graphic where you can see change in job volumes and how that directly translate to property markets.
So jobs, Grace.
Well,
and how crazy is that? Back in February.
Isn't that telling? And he's not wrong, but also I don't think anyone expected it to happen the way that it did. So, we have seen so many people moving from the cities because there aren't any jobs out to more regional locations in search of cheaper shelter, better job prospects, more stability. And it might not have eventuated in the way that they thought, but, I guess it goes to show, looking back on everything, that's why the Australian property market has remained so resilient this year. Because everyone still needs shelter. Prices haven't dived by 30% because there's still enough demand, because there are enough people that live in Australia that are looking for shelter and looking for jobs. Of course it's going to stay okay.
Exactly. And it's just crazy as well to see how well our, property investment experts are able to sort of predict without even knowing, what's coming around the corner. And no one could have predicted COVID. But just, the jobs and internal migration, which is, what we're seeing today, which is just, it's really interesting. But Simon actually had another great point during that podcast. Let's have a quick listen now.
The job growth, that happens first before the property growth. That is the leading indicator. An unemployment rate is useless to a property investor. If you think I'm just going to go and try and find what's got the lowest unemployment rate in all of Australia and that's where the hotspots are, that's not going to be helpful. It's understanding all the decisions that are happening behind the scenes, whether it's city councils, whether it's state governments, whether it's the big businesses with different industry sectors, those decisions that they make, what jobs will it create? That's the stuff that literally all day my head in. That is the leading indicator for where is the next Hobart, where is the next Ballarat or Launceston. It's understanding those leading indicators.
Great. So again, jobs, and it's, the government at the moment, all of the focus is on job creation, JobKeeper, JobMaker, everything that's sort of been enacted over the past several months is on jobs. And we have actually seen, unemployment, it hasn't reached those levels that were predicted at the start of this crisis. So it is actually bouncing back. The economy is bouncing back. We've officially also exited the recession finally. And, we are seeing that property sentiment just follow that line and improve and increase as well.
Yeah, and you can see that the value did drop a little bit, obviously, at the height of the crisis, and that was when the most jobs were at risk or people had lost their jobs or were in hiatus, not working. And it goes down back to that, doesn't it? The regional spread, people moving back. And it'd be very, very funny. You can't help but laugh at listening back to this right now, because I feel like it's been a year that's gone on for about 10 years. Yes. We've seen a whole property cycle, 2 property cycles, for people in Melbourne and stuff that had to deal with a lot more restrictions than anywhere else. We've seen Western Australia living their lives pretty safely for the last 6 months. So
Queensland pretty much as well.
Yeah. So it will be interesting, I guess, to see in the future whether we do have that return of the people from the regions or whether life's never going to be the same. So many more people are working from home.
Exactly.
So many people have found flexibility in their lives that didn't exist before. So I guess it's one of those things where it's going to have to be watch this space. But while there were a lot of landlords who did struggle at the time, not sure how they could pay the mortgage on their own properties, let alone their investment properties, and tenants that were suddenly out of jobs, it was short and it was sharp and it was really, really tough. But
that's true.
I think it's safe to say that it's starting to look all right.
Fingers crossed. We don't want to jinx anything.
No, but hopefully, that COVID vaccine will be coming out soon. And Gladys Berejiklian here in New South Wales is saying we still need to be, thinking about how COVID-19 will affect us through the future. But things are starting to look up. And I think for landlords, that's a really reassuring thing to hear.
But speaking of those dark days back in April, Simon and Phil jumped on a Zoom call because the situation at the time, they couldn't actually be here in our offices in the studio. So at the time, the dreaded term recession was being thrown around, and so much of the nation was obviously doing it tough. And Simon broke down the policies and support packages that investors needed to be sort of aware of at the time. And he was talking about where they should be investing if they can, and what the other side of the crisis will look like for the Australian property market. So it's also really interesting to remind ourselves of that time. So let's have a quick listen to what Simon had to say.
This is a crisis. No 2 crises are the same, but there's always things that we can learn from history. So what Propertyology has done is looked at the various crises going back, say, over the last 100 years, and specifically to Australia, we've had a recession about 30 years ago. There's been a couple of major stock market crashes over the last, say, 30 years. There's been SARS and swine flu that are virus-related. There's been the GFC, as you said. There's been credit crunches. So this coronavirus, I guess, it's probably a combination of SARS, swine flu, and a GFC. And it's important that we put all this in perspective. So it is a virus. It's important that people understand that the cause of the crisis is not an economic fracture. The global financial crisis was an economic fracture caused by the US. This is a crisis not caused by economic conditions, caused by a virus, which will have economic impacts, because the way to deal with the virus is to effectively close the globe down and squash the germ. So whilst we're all going through an enormous amount of disruption and inconvenience, some comfort that everybody should take out of this is, unlike, say, the GFC, this is a defined cause with a defined solution and a relatively defined time frame. We've dealt with viruses before, and the scientists of the world are dealing with the cure to that, and we're going through the temporary disruption so that people don't get infected until then. But we do know that there is the light at the end of the tunnel. We can't set our calendar by it. I guess the best guess, sort of, if you try to read the messages of the politicians who have the best information at the moment, is it might be somewhere sort of 4 or 5 months maybe of this significant disruption, and then progressively start to open the world back up again.
So it's really interesting to see them talk about a recession being 30 years ago, and then also just to see Simon sort of say 4 or 5 months of lockdown and then the world will open up again. And that was April, and here we are in December. And honestly, in Europe and America, things sort of, are looking really bad. And obviously we're still locked in within Australia. So how interesting, Grace, just to hear that.
Yeah, I was just thinking through, April, May, June, July, August, September.
It's been a lot longer.
Yeah, well, no, he was pretty spot on apart from the Melbourne thing. But I think that, again, comes back to how proactively Australia actually acted at the beginning of this crisis. And we haven't seen that from, elsewhere in the world. And they're going to be paying the price for a lot longer than we have here, especially over in the US. Even if they got a vaccine over there now, the damage is already done.
Unfortunately, yeah.
There's places in Europe where they'd probably say the same. So we are in such an extremely lucky situation. And I guess, that comes down to the fact that in Australia, people listen to the government. We acted early. We acted, in some ways, people thought it was far too tough, some of the things that we did, but it's paid off. And, especially in the world of property. And, that flows on to so many other things too. It flows on to retail, tourism, everything like that. We have remained insulated because we did have to deal with some pretty tough stuff at the beginning.
Yeah, we did, Grace. That's right. And I guess sort of looking at the world, it might be a little bit easier for Australia being an island country because we can't just sort of close our borders where, that's obviously been a lot harder in Europe where all the countries are landlocked. But we do hope that things do look up over there as well because we do, we need the world economy as well to bounce back. And
we're not separate from the rest of the world too. People have relatives overseas, people do business with overseas entities. And
so many Aussies.
Life won't be the same for a long time still, I don't think. So I guess for now it's all about getting back to as much normality and normalcy as we can and just dealing with it.
It was really interesting as well to hear Simon back in April talk about, the economy bouncing back rapidly and, the property market also, the sentiment increasing rapidly. And that's exactly what happened. So Simon was right on the ball when it comes to that. So let's just hear him quickly say that.
I would argue, Phil, that there has never been an event in the history of mankind, not just our lifetime and not just Australians, in the history of mankind where we've got a crisis that affects 7.8 billion people on the planet equally. We know what it is. We know what we need to do to fix it. So therefore, for probably the first time in mankind, we've got the whole globe united doing the same thing. In Australia, it's the first time in my 50 years on this planet that I can recall that we've got the federal government, every state government, ASIC, the Reserve Bank, APRA, all on the same page. I can't ever recall that ever happening before. So we will get through this and it will be a rapid bounce back, I think, out the other side of this.
Yeah, so rapid bounce back. Simon was right on this one. Grace, we're just going to take a really quick break and we'll be back in a moment.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
And we're back. So we've got Grace here with Maja. I'm Maja. I was just replacing Phil today. Me and Grace have been looking back at some of the smart property investment top podcasts of 2020. So moving on, let's switch things up a little bit because we've just been talking about COVID. Let's look at some of those more popular stories that are sort of unrelated to COVID. So earlier this year, we were actually joined by Momentum's very own Stephen Cooper, who at the time talked about investing in his third property, which he wanted to do by the age of 30. And unfortunately, I think Steve didn't get a chance to do that because then COVID hit, obviously. But let's just hear what Stephen had to say about expanding his portfolio and why he prefers regional over big cities, which is something that we're seeing happening at the moment as well.
Yeah, look, I'm still not sold on buying a property in a major metropolitan area. I mean, I grew up in Wollongong, and I've seen the property prices in my hometown, home city, get ridiculous. I know there's a place down the road currently on the market down the road from my mum and dad's, and I'd say it's probably 900 metres to the beach, and it's 1.6 million, and it's literally you're going to push the house down and build something on it. Mm-hmm. And as much as I'd love to be able to walk in there and go, yep, here's $1.6 million, I'm going to knock this down and build a family home, I can't help but think that is a little excessive. You've got your lifestyle, you're close to the beach, you're close to the city, you're close to Sydney, it's all of those things, but I can't kind of see that recouping of costs and the mortgage repayments, right? I was having a conversation with my mates who's a banker the other day, and he said, we're constantly hearing that at least 50% of Australian mortgage owners are in mortgage stress. And I'm sitting there thinking, bloody hell, we're at the record low interest rates. What's going on? So, yeah, I'm not sold on buying in the major metro areas yet. For me personally, I don't see the return on it. And there's a whole heap of permutations that go into making the assessment.
So, Grace, it's really interesting to hear Steve sort of talk about looking regional. And recently we just saw a survey from Property Investment Professionals of Australia that said that investors are relocating to regional areas, and that the top performing locations for buyers to migrate to include sort of regional New South Wales, regional Queensland, regional Victoria. So it's really interesting to see that he's sort of had that mindset at the start of this year as well.
Yeah, I feel like we're only going to see prices go up in those regional hotspots.
Unfortunately, because everyone's going there, right?
With people able to work from home, people can work from anywhere. And the benefits of, places like Newcastle, places like Wollongong, places
Central
like
Coast,
Geelong, you're still close enough to a major city that you can just pop in for meetings. You can live a better lifestyle than, being in the rat race and driving 45 minutes to an hour in traffic on toll roads to get to work every day. That's no longer something that people actually have to put themselves through. And if they're selling up in Sydney or Melbourne to go to a regional area, they've already got way more capital than anyone in those regional areas will have. And they can obviously, buy the beachfront properties, knock down and rebuild, and still think that they're actually getting value for money for $1.6 million.
Exactly. And I think road infrastructure sort of comes into this as well. If you had I know the government keeps promising to do something about our trains. Faster trains connecting sort of Sydney to, like you said, Wollongong and the Central Coast and Newcastle, I think a lot more people would move to these regions. And moving on now to our last podcast today that we'll be discussing how to achieve the ultimate investor mindset. So I think this is a really interesting one to go back to and listen for everyone out there sort of who's looking into moving into property investment. So property investor and best-selling author Paul Glossop joined Phil for this one to unpack his 7 steps to achieving an investor mindset and outline how this philosophy can be applied through COVID-19 and into the future. But before we take a listen to this one, we're just going to take another quick break and we'll be back in a second.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
And we're back. So Maja here today replacing Phil Tarrant. Thank you for joining us on the Smart Property Investment Podcast. We are just, Grace and I, my colleague here at Momentum, are just taking a quick look at some of the best performing shows over 2020. And we were just talking about one that Phil recorded with Paul Glossop, where they talked about how to achieve the ultimate investor mindset. So Paul talks about concern and influence and what you should do to keep your focus, why you should keep your focus on your mental health as well, and sort of making sure that your mental health is at its best. So let's take a quick listen.
Well, I mean, for me, it comes down to probably 2 big things here. Is you need to understand your circle of concern and your circle of influence. And I probably get a little bit too deep when I say that, but if you think about a Venn diagram scenario, really, I like to think about control comes down to focusing on what you can actually influence, not what you're concerned about. Because to be honest with you, if you and I worried about things that we're concerned about and had those things actually influence the way we live our lives, no one would be able to be productive. So understanding first and foremost, what can you influence, and understanding how can you then concern yourself with the things that you can influence. And when it comes down to that, once you've understood that, taking a responsibility irrespective of what you do from your property investment journey, when it comes down to it, if it's meant to be, it's up to me analogy is it couldn't ring more true with any investor, whether it's the first investment or their 50th. If they can't take responsibility for their good decisions and bad, then ultimately they really shouldn't be in the position to actually put pen to paper on a sales contract in the first place. Because if things go right, they'll take responsibility. If things go wrong, they won't take responsibility. So going into it with the understanding that you are responsible for your journey and ultimately your destination will mean that you're going to be far better positioned to essentially learn and become a better investor along the way.
So go back and definitely listen to that one. Some great advice from Paul there that really resonates with all of us, and even those of us that may not be property investors. Grace, what do you sort of think of what Paul just said?
Yeah, that takes me back to March, April, when I still am very much a germaphobe. So it's been an interesting year, but, you know, there are only so many things that you can have influence on. Yeah. So it is all like, you know, just general life. It's about stepping back, working on the things that you can change. I know that I can sanitize my hands, I can wear a mask, you know, that's obviously a very in the right here, right now scheme of things, but it's great advice, you know. It's so important that anyone that's going on a property investment journey knows what they can control, you know, knows what their income is, how much they can afford to actually spend, what happens if this goes wrong. You need to have contingencies in place. It's just a great guide for real life, basically, Maya.
That's right, Grace. And I think that's been sort of the toughest bit of the COVID crisis in 2020, just sort of we had no control over anything. You know, things were just unfolding as they were unfolding, and we didn't even have control over our own lives pretty much. So that's sort of been the toughest bit. And we do just have to sort of let go and just focus on those little things that we can make a difference in, and just trust that everything's going to be okay, I guess. But thank you for joining us today. We'll be doing a few of these podcasts as we sort of wrap up 2020 and head into 2021. Thank you, Grace, for joining me today.
Thanks for having me.
You've been a great guest, as always. So keep reading Smart Property Investment, keep listening to our podcast, all the latest news there, and we'll have some great guests on the show heading into 2021. So stay tuned. Thank you for joining us.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.